Hi folks, Scott here, and this is the wrap for Thursday, August 15th. So we had an unfilled down gap, sizable down gap at the open that never came close to filling. It just dumped. And we also finished at a 20 plus day low close. We broke through the window, the top of the window. Still have not quite filled the gap, getting close to the 50-day moving average and the unfilled gap of 1648.50. So it could get filled tomorrow. We'll see. But what I want to show you going into tomorrow are the results of fading gaps after an unfilled down gap that also closes at a 20-day low close while above the 200-day moving average. So I'm eliminating the extreme bear markets because they have different dynamics in general altogether. And using Gap Trader, my back testing tool, here are the results. That's using an end of the day stop. I was a little bit surprised this hasn't happened more often, but it is what it is. That's an unfilled down gap in a 20-day low close, and then fading the gap afterwards using an end of the day stop. Not something I recommend, but a good place to start your analysis. And you can see there's never been a down gap loser. Average winner is about 3 points. Correction, 6 points. Take these numbers divided by 500 to account for 10 contracts and $50 per point, which is what this test is showing. So small sample size, but at least historically it has shown that by the end of the day at least, those gaps will fill more times than not. And a gap up has above average odds as well, a little bit above average odds, and has been a nice winner on average as well. Now I'll rerun those numbers for our members in the morning using MTG stop parameters, but after a large unfilled down gap, you tend to get gap fill in general in just about any market condition and in either direction. So we do have other considerations going into tomorrow. Tomorrow is OpX Friday, Options Expiration Friday. It's also the 16th of the month. And those two factors tend to contradict each other historically in terms of having a bias. So it could be an interesting day. I'll give deference to the OpX Friday bias versus the 16th. But anyhow, I'll explain all of that. Actually, it'll all be in the worksheet, which will be posted about 6 p.m. tonight per normal, which will give you an early look at the gap guides and considerations that you may want to think about. And then I will finalize my plan and post my comments per normal around 9:20 Eastern time in the morning. All right. Odds favor gap up too, at least on the small sample size, which I think off the top of my head, OpX Friday tends to gap up too. So we'll see. And let's see. Looking at today's worksheets, we had sizable down gaps, all of them opening below yesterday's lows, and all of them in a DL zone because we sold off yesterday. I think everything had a red candlestick. And you see it was a 49% historical win rate using our MTG stop parameters, which the worksheet assumes in all of these. In fact, I need to probably... Oh, it says that. Yep, assumes MTG stop parameters there. 50-50, just dead break even historically. Let's see, Thursday of options expiration down gaps are neutral setups. After an inside day during similar markets, neutral to weak. So just nothing there whatsoever. I'll even show you the gap guides. And you can see today was just dead neutral DL zone. Just weak stuff, and ETFs look just the same. So easy one to pass on. My pre-market comments and additional research also showed some other concerns. Last night's video, I told you it was sort of an unusual market condition. Sure enough, this one gapped down despite some decent data for gapping up. Let's see, down gaps in August, especially these large ones. If you get rid of the 10-day moving average, just look at all large down gaps in August, historically 10 of 26. 38% win rate and 0.8 profit factor. If you size them, what I call an extreme gap, at least 80% of the 5-day ATR in size, which would be meant opening below 1672.50 in the ES, and also after closing above the 200, 33% win rate, 17 of 51. Even though the last four had been winners, that's no longer the case. And an optimization showed attractive results for following the gap. That means going short of the open, targeting 4 points. That was a winner again today. And I updated a couple minutes afterwards when I noted that less than the 10-day moving average knocked a little bit of that attractiveness off of it. I did not do it. Some folks did in the trading room. And let's see, overall I just had neutral guides, neutral to weak guides, more negative factors than positive for fading down gaps. No gap fade for me. Instead, I'll look for short opportunities after the open. Though we'll be open-minded to the long side, depending upon how the morning unfolds. What I mean by that is large down gaps and large up gaps, for that matter, can be a little bit unpredictable, and you really need to take a cue from the price action. That was my plan. There were scenarios that could have evolved where a high breakout would have looked more attractive. And let's see. The blue line is yesterday's close. This is today's price action in the ES, which is the S&P 500. Here in the Russell futures, nothing came close to filling the gaps. Everything sold off. So this was a good call, good decision to avoid fading today's gaps. Pretty easy, no-brainer decision in my mind. No long-term historical edge for fading this gap. Good decision because it would have been stopped out by a mile. 15-minute range guides came out, and the let me show you those real quickly. Whoops, that's the first hour. Low breakout favor. I'm looking 55 on 1.1, 4-point target, 4-point stop. Check. And I'm looking for consistency among the indices. That's a half a check. Check. And then Russell was neutral. And then looking at the ETFs. Check. Check. Leans there. And leans there. So basically you had 4 markets favored, 3 leaning that way, and 1 neutral. So not totally compelling, but strong enough to trade to the downside. One note, the Russell, for some reason, we had another bizarre instant. Something's going on with our server. It's not anything in our code, and we're trying to work through it. This part of the table did not post today. Our backup plan worked this time. It was late a couple days ago. We had a similar problem. We'll get it sorted out. But it was posted by 9:47. And you just need to, you need to have plans. Sometimes things will go wrong. We cannot make everything work perfectly because technology and the internet are just too unpredictable and difficult. You just can't control them. We do the best we can. We actually do a really good job, I believe, for a very small company, using live intraday data, posting these things, normally on average about 45 or 50 seconds after the 15 minutes and first hour finish. Nonetheless, I went short, called it out. It was an easy decision and made +4. Was very patient, and even though it touched it, didn't fill me, bounced a couple points. I stuck with it and got filled. Nice easy 4-point win in the ES. The first hour guide data came out. It too was very good, and I got filled while doing a mentorship this afternoon on a break of the first hour low. Traded the same size position, but this time what I did was risk 6 points instead of the normal 4 points. And the reason I did that is because on these big down days like this, volatility picks up, which is going to lead to a higher ATR, average true range, tomorrow. And I've just found and witnessed that using 4 points when ATR is going to be double today, the true range today is going to be double, just doesn't work as well. So I posted in the trading room, and I use a lot of discretion on the range guides, more so than the gap guides, that I'd use a 6-point stop today, targeting 5 points. Well, while I was in my mentorship, I got filled short at 1656 and a quarter. 1656 and a quarter. See if I can expand that. 1 tick below the gold line. Okay, so 1 tick below it, 56 and a quarter. Went a couple ticks through it. It bounced straight up, and guess where it went? If you've been watching my videos the past week, you're starting, and you don't know me, you could think I'm losing my mind, but I swear to you, it buffaloed me again. The high was 62.50. My stop, a 6-point stop, was at 62 and a quarter. It went 1 tick past it and then rolled over. So I caught the low and the high and got stopped on that, giving back all of my profits from the 15-minute range trade and a little bit more, 50% more. Very frustrating. I don't know how else to say it, but right idea to use a bigger stop. I don't know. It just happens. Okay, I had the right idea, didn't work. The only thing I can say is I didn't trade overly aggressively because the data was better on the first hour guides than the 15-minute. It was actually much better. I think 7 of the 8 met the criteria, but these big down days can be problematic. Now the good news is, guess what did work like a charm? The gap gotcha. Whoops. I did an aggressive, very aggressive full position, multiple accounts today. I did an aggressive entry at 1659.75 with a 2-point stop. Once it closed below the trend line, I added to the position at 1658.50, I think. My weighted average was 1659 and a quarter, 1659 and a quarter, and I got out an average of 3.5 points on the whole position at the end of the day. Well, not quite 3.5. I got 3.5 on part, and actually the rest of it was about 3. So a little bit more than 3 points of the whole position. I misspoke, which was fantastic. So, and that position was more than double of this loss here. So even though I only made 3 points, it made up for it, and I ended up basically up a little bit. Actually, not a bad little day. So recover nicely. This is called the gap gotcha. There are rules and discussion ad nauseum in the our discussion forum. It's sort of an indirect probability trade based upon my extensive analysis of gaps and how they tend to finish at the end of the day. And that was my day. So all in all, a nice recovery. Very frustrating because it could have been a tremendous day, and I avoided the losing gap to boot. So all in all, a good day, and we'll see what tomorrow brings us. And that is the wrap for Thursday, August 15th. Have a good one.